Hey everyone, welcome back to Corporate Decoder, the place where we unlock the secrets hidden within corporate filings. And today we're diving into RadNet Incorporated's latest report, which seems to be all about keeping their ducks in a row for future offerings. Think of it as cleaning out the closet before an important guest arrives. Before we get started, if you like getting the real story behind company moves without all the corporate jargon, hit that subscribe button. And if you want to connect with a community that loves dissecting these filings, join our Discord server. The link is in the description below. So what is the big deal here? RadNet Incorporated, a pretty significant player in the medical imaging space, if you recall, has filed a document known as a shelf registration statement. Now, what does that actually mean for us? Imagine you are a company that might want to sell more of its stock or even some bonds in the future. Instead of filing a new request every single time you want to raise money, you can file this shelf registration. It is like getting pre-approval to sell up to a certain amount of securities over a period of time, usually a few years. This filing on the 4th of December 2025 is essentially RadNet saying, we want to make sure we have this option available for us down the line. It is a strategic move to have flexibility and be ready to act quickly if market conditions are favorable, or if they need capital for growth or other business needs. Following up on that, they also filed what is called a prospectus supplement. Think of the registration statement as the main blueprint, and the prospectus supplement is like a specific addendum or a detail sheet about a particular offering. In this case, it is not about RadNet selling new shares directly to the public right now. Instead, it is about registering shares that some existing shareholders, referred to as selling stockholders, might want to sell. They are looking to sell up to about 73,567 shares of RadNet's common stock. So this filing is making sure that those specific shares can be legally resolved by these holders in the public market. It's a way for current investors to potentially cash out some of their holdings. This specific filing supersedes any previous document related to these particular shares, ensuring everything is up to date with the new shelf registration. Now, anytime a company is dealing with registering securities, especially for resale, they need professional verification that everything is on the up and up. That is where legal counsel comes in. RadNet has included an opinion from their lawyers at Reed Smith LLP. This document basically states that, from a legal perspective, the shares being registered are valid and have been issued properly. It is like a lawyer giving a stamp of approval on the legality of the transaction. This is a standard but important piece of the puzzle to ensure regulatory compliance and investor confidence. And you'll find that opinion from Reed Smith LLP listed right here as Exhibit 5.1. They also included their consent, which would be Exhibit 23.1, confirming they are okay with their legal opinion being referenced in this public filing. These exhibits are crucial for transparency, allowing regulators and investors to see that the company is adhering to all legal requirements when it comes to its securities. Let's quickly touch on what is being registered. It is the common stock of RadNet with a very small par value indeed, $0.001 per S-share. And for those who want to track it, its trading symbol is RDNT on the Nasdaq exchange. This is the core ownership stake in the company, and what is being made available for these selling stockholders to potentially offload. Now, looking at this filing, it is not a deep dive into RadNet's quarterly financials. There are no tables showing revenue growth, profit margins, or cash flow changes. This is more of a procedural filing, a housekeeping item if you will. It is about setting up the framework for potential future stock sales by existing shareholders. So we can't really perform a Warren Buffett style deep dive into the numbers because the core financials aren't here. However, what we can infer is that RadNet's management is proactively planning for the future. They want to maintain the flexibility to raise capital or allow significant shareholders to exit portions of their investment. This often happens when a company is confident in its long-term prospects or sees opportunities that might require external funding. Or it could simply be that existing investors want to realize some gains. The main takeaway here is about preparedness. By filing this shelf registration and the accompanying prospectus supplement, RadNet is ensuring it has the legal and regulatory foundation in place for future stock transactions. It signals a degree of foresight and strategic planning. There are no immediate financial impacts disclosed in this particular report, but it sets the stage for potential financial activities down the road. For us, as observers, it is a sign that the company is managing its capital structure options intelligently. So, to wrap up, RadNet Incorporated is essentially tidying up its paperwork to ensure it and its shareholders have the flexibility to sell company stock in the future. This is a common and often necessary step for publicly traded companies. We don't have hard numbers defining current performance in this filing, only the mechanism for future transactions. What is your take on this type of filing? Do you think it signals strong future growth or just typical corporate activity? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate insights, and don't forget to join our Discord community. The link is in the description where we chat about these filings and so much more. Thanks for watching, and I'll see you in the next video.